Good evening, everybody. This is Steve Poulter with Ghost Trades. I'd like to talk to you about the upcoming week in the stock market and do a quick review of last week. We had an extremely volatile week last week because we had the interest rate hike that some people didn't think was going to happen because of the craziness with the banking situation. However, by Wednesday, when the interest rate announcement was going to come out, I think most people had accepted the fact that we were still going to raise interest rates, which we did, about a quarter of a point. However, Powell came out and kind of spoke a little what we call dovishly, which means a little softer, a little kinder, and said maybe we're getting close towards the end. So the market was actually doing okay. It rarely screams up when they raise interest rates and say we're not done. However, Wednesday afternoon, right at the end of the market, Janet Yellen, the former Fed chair and the current Treasury Secretary, said we're not going to continue to bail out banks, in a nutshell, out of the blue, unsolicited, and it sent the market into a tailspin. In fact, if you look at history, the market dropped more in a half an hour than probably in most of your lifetimes. Certainly once every 5 years does something like that. It was, in my opinion, unnecessary and caused a lot of unnecessary panic in the market. That panic spilled over into Thursday, and we had swings, crazy swings again. So on Wednesday and Thursday on the Dow, between the top and the bottom, we probably had 600 points of difference. And on the S&P, we had about 70 points of difference. So that makes a very scary situation for a lot of people. That's why day trading is so difficult, because if you are on the wrong side and the market drops 70 points on the S&P in a half an hour, there's nothing you can do. You're going to lose money. Friday, we opened down, but as what happens a lot on Friday, we rallied. And we rallied pretty much all day, and we finished the day pretty strong. In fact, we actually finished up for the week. So the major indexes were all up last week. However, the Dow is still now down for the year. The S&P is down for the last month, and the NASDAQ has been showing some strength, and that's been rallying. So that's where we are coming into this week. Now, this week, I think also can be very scary because this banking nightmare is not over. Some people pretend that it's over, but I read a lot of articles this weekend. I did a lot of research, and a lot of banking giants and hedge fund giants and people we listen to in the financial world said, we are not done. In fact, between the banking crisis and the Fed chair raising interest again and signaling we still have another one, look for us to go down over the next while. So on Tuesday, we do have some big announcements. We have the consumer confidence. Now that can rally the market if it surprises people to the upside. However, I'm not holding my breath that we're going to see a lot of strength in the market for the next while. And on Thursday, we do have the big one, and that's the GDP. Now, if the GDP, the gross domestic product, goes down 2 quarters in a row, that signals a recession. And so that's going to be a very important number. We also have the unemployment claims on Thursday, and we've seen those climbing lately. And if that continues to climb, that can slow the economy as well. But sometimes bad news is good news, meaning the interest rate hikes might be slowing or stopping. Then on Friday, we have the CPI, which is an inflation index, and it will show that prices, if they're continuing to go higher, or if they're going higher at a slower pace, which the government is hanging their hat on, saying, yes, we might still be going up, but we're going up slower, and the worst is behind us. Not if you've been shopping, not if you put gas in your car. We're so close to $4 a gallon where I live, it's ridiculous. So the market, the government can paint it any way they want. I am still very worried about our economy, not only in the stock market, but in the economy as a whole. So going into the week, I am very cautious. I'm nowhere near bullish. If I had to choose, I would say I am bearish going into the week, especially going into tomorrow. We do Monday. A lot of people don't know this, But Monday historically is the worst day of the market. I always look for what I call a Monday fade. So I'm careful on Monday looking at new positions, and especially with the GDP, the gross domestic product, hanging over our head, I would be very, very careful this week between that and the banking crisis. So be careful on your trades. Have a great week. If you're with us, paper trade, paper trade, paper trade, and see if you are right in your expectations of where the market is heading. And reach out to us anytime you have any questions. Have a great night. Thanks.